Hey everyone, this is James with WSTrades.com. I want to talk about using the Stochastic Oscillator to help you make better trades. So what is the Stochastic Oscillator? The Stochastic Oscillator is a momentum indicator that shows the location of the close relative to the high-low range over a set number of periods. The indicator can range from 0 to 100. The closing price tends to close near the high in an uptrend and near the low in a downtrend. If the closing price then slips away from the higher low, then momentum is slowing. Stochastics are most effective in broad trading ranges or slow-moving trends. Two lines are graphed, the fast oscillating percentage K and a moving average of percentage K, commonly referred to as percentage D. So let's hop into Thinkorswim here and see how to get this stochastic oscillator on the chart. In the upper right hand corner, I've got a studies button. I'm going to click that. Then I'm going to click edit studies. Then in the smaller window in the upper left, you have a little search box. So I'm going to search for stochastic there. And you'll see a stochastic fast and a stochastic slow. So the fast is a little more sensitive to price movement and can trigger some false signals. So if you want something that's a little more reliable and a little less sensitive, you would go with the slow, but I'm just going to choose the fast for now. So go ahead and double click that, click apply and click OK. So now you can see that at the bottom of the chart here. So you can see the red line is going to be the percentage K, and then the purple line is going to be the percentage D. So how do we actually use the stochastic oscillator to spot good long or short trades? Well, one way you can do it is look for an overbought signal. So you can see here that both lines, the percentage K and the percentage D here, are riding above 80. That is an overbought signal. Could be a possible reversal coming, and that's what we had here, a big move down in price as this thing was riding for quite a while up above 80. Another thing to look for is an oversold signal. So we have that down here. Both lines dipped below the 20 level. That represents a oversold signal here on the stochastic oscillator. We had this huge reversal and this huge rip in price. Another thing you can look at is the percentage K line crossing below the percentage D line. So you can see that happening right here as this thing was also overbought, and then we had this big move down in price. And then we have the reverse of that, which is the percentage K line crossing above the percentage D line. And you can see that happening right here. So this thing had dipped into the oversold level for a little bit here, climbed out of it. And then you have that red line crossing above that purple line, or that percentage K line crossing above that percentage D line. And then we had this huge rip and this huge reversal in price. What you can also look for is divergence, and I chose this example right here because we have some pretty wide divergence here. You can see at this point in the chart right here, SPY is trading around $445, and we've already got the stochastic oscillator saying we are in overbought conditions. So as you can see, you've got this thing really flattened out here. If you were to draw up a line right there, you would see we're already way up here near 100. Stochastic oscillator saying we are overbought, but look at the price action, just really cooking here and continuing to rip. So this is some pretty wide divergence here, and then we had this big move down in price right here. So those are several different ways you can use the stochastic oscillator to spot good long or short entries. So if you thought any of the information in this video was helpful or useful to you, please like this video. Please also subscribe to the channel if you're not subscribed. Hit that notification bell. Appreciate you for taking the time to watch this. Talk to you soon.